Eventually, though, it will bottom out like we see here, and it's an amazing time to buy.
In the previous cycle, it did get down to the low blue level here. So right now that would indicate a level of 41,000.
Here was an amazing time to buy also. Even though it looked like it was bear market, you're buying at like 20K. It was below production cost, right? I mean, yeah, you would have made more trading Solana, but then at the end of the day, people are very lucky that Solana survived.
Welcome to the show. This is the Moonboys Podcast. My name is Theo, and today I'm joined by Rom Reactor. How's it going today, Rom?
Good. How are you guys doing? I'm doing great, basically, and I'm getting a bunch of stuff set up for you guys, so just give me a sec.
Awesome. And I'm doing well, and none of this is financial advice. We're not financial advisors, just some guys on the internet.
Let me share the screen. The news, guys, the news. We have 3 new indicators for all you guys to take advantage of in TradingView. Where is it? I think this is the one. Okay. Nice. So I have finally updated the production cost. We made the liquidations heat map last stream, and I have fine-tuned the dollarized volume, Moonboys dollarized. Now, of course, Theo, you have the fourth one. We can discuss that one after. That's your. But
Hell yeah.
I think there's a way we're gonna make a website later. We're gonna see all of ours here. But for now, we're just using TradingView. So the biggest, most popular ones we see from you guys is the liquidations heat map. Of course, you could go on TradingView, type any of these in your chart, and you'll be able to add them. So if I open up the Bitcoin chart right now, you can simply just go into indicators. The moment you start typing Moonboys, there we are. So we have the support band, the dollarized volume, production cost, and liquidations heat map. And let's just quickly go through each of them, just because I'm pretty happy with this, and I think we could make a lot of powerful potential. And I think Ivan and should definitely take a look if he has the time, because this is really awesome stuff, and it's free for now, so why not? Let's start off with the liquidations heat map, the most popular one. Now, what we're looking at here is a script that I put together with the help, I don't know if it was from the last stream with Matt, but where we got this idea to look into this liquidations prices and floors, because they were getting flushed, and somebody told me, oh, it was in my private group chat that I'm in, somebody told me it's like all the liquidations got flushed until 60K, and I was like, no, I don't think so, there's probably more. So I did the digging. I pulled up the Bybit and the Binance open interest, and as well as the Coinbase volume. Now, sadly, Coinbase does not have open interest data going into TradingView, so we couldn't utilize it. But with the volumes of the Coinbase chart, we're able to give it a little tweak to the liquidations that are already present on Binance. So with that said, the top biggest liquidations are marked with the Thunderbolt emoji. So you can see that the biggest shorts started playing out at 125,000, and from there on, all the other shorts, they kind of kept getting put into position. And the next biggest one right now is over here at this 98 100K level, basically 100K short. From the opposite side, you have the support. So most of these got hit already, but you know, we're still playing around with this 57K and 50K support levels that are going to be the next ones to hold. If you're looking for a bounce, this is how you would do it. You would see which, you know, it doesn't work always. Like here, the support kind of was holding here, but then it got drained, and these two didn't really hold yet. You know, I mean, they are kind of holding. This right now is kind of holding. So, but it did push all the way down to almost this level. So like, you have to kind of wait till the bounces form to make sure, like, yes, this is a bounce support. Now we're probably going to go back up to some level. The biggest support is over here at 23K. It might never get there, but if it does, that would be a historical support given the liquidations heat map. Moving on, we also have what I added. It's a new indicator, and I like to call it the production cost of Bitcoin. This is partnered with Cambridge University. They basically gathered the data for the low average cost of what it takes to make 1 Bitcoin or receive a block reward in our case, mining Bitcoin, and the top bound and also the middle. So we take the average, we quantify it with the cost of 0.05 cent kilowatts, multiplied by the price, and you have these bounds. The lower bounds usually always always holds. Now, of course, as the price of Bitcoin goes down, miners do see that they're not going to be able to operate anymore in profit, so they will start closing down. And that's what we saw here when the first initial support of miners held around 80K, a lot of them acted quickly, and they knew that this was a bear trend. They saw, they kind of see that, yes, this is the bear cycle. We're not going to take any games. So they started selling off their minor operations. So died down. They either turned them off due to electricity, not to use them, or even started selling their equipment, right? And the production costs started dropping. It dropped all the way to 50K, and then now it's kind of back up to 60K. So will 60K hold as the final drop? Will the miners hold their ground? That's a question. This is what this indicator is showing you. Of course, it might still drop more if 67 or 60K starts to break, and miners see that. They might again close more operations, and the production cost will drop with that. Eventually, though, it will bottom out, like we see here, and it's an amazing time to buy. So once you see production costs go sideways, it's a really, in the bear market, going sideways is a really good indicator to know that, if it's nearing this line, you're getting amazing deals, as we've seen in 60K here and 16K over here.
So wouldn't
yep,
the bottom range keep going down as the price goes down? So how do we actually use this to trade, right? Because it can
like
violate the floor, right?
It's a time thing. So as the price keeps going down, the miners that don't want to operate anymore, they will close. They will push the production costs down further, but they do it before, or in between, like the prices. So usually it doesn't go, like the price doesn't go sharply below it before the miners react. Even in COVID. Like, where's COVID right here? It's not on lock sale. It's not on. Okay, everybody turn on the lock sale. You'll see it now. But yeah, like in COVID, the miners had their operational cost at 5,000 March 4th, 2020. And then once the COVID crash hit, some of them did close, and the production costs very quickly dropped, almost on a, there was a couple of days, maybe like the drop was below them, and they noticed that, and then it recovered. So they took their initiative and they closed operations, did what they had to do, and then the production costs dropped to that level right away. And from there, though, it never dropped again. It just kept going back up, and the miners saw that, so then they're like, okay, we're going to increase our production now. And of course, this is the halving that occurred. That's why the price went up so much higher here, and the lower bound is kind of like here now. But then the miners took advantage of the halving, right? So they had to, the cost went up, they had to shut down. It's an ongoing thing, but if you look at the lower bounds usually hold always as support, and once they form on the mining scale, like it might be too late, obviously, but if you were accumulating here, you were good. Like you didn't have to risk it to get the biscuit. Even each daily close went back to production cost. So for example, before even they adjusted the production cost, like this initial drop closed over here, but then the next day it opened and it went to production cost. And you could have bought Bitcoin here, even though the next day it went all the way down and then it went back up to production. This happened in one day, this candle right here. So you didn't have to. Yeah, you might have not bought it at 5,000, or at 3,800, which was the bottom. But whatever, you bought it at 5,600, and from there it went to 70K. So, right.
So if it goes below production cost, it's a good deal.
It's an amazing deal, yeah.
Yeah.
It happened a couple of times here. It just happened because of the halving. And then from there, it never really looked back until the bear market. Then it started retesting it again, and that's when you saw the miners right away. They started seeing top signals, so they cut their production costs. And here, actually, they cut it really hard. They really thought it was the bear market, but instead it was a fake out. So then they went back into the game. But starting here again, the price was in bear market, so it kept pushing closer to production costs, and they were kind of forced to close again. But eventually it went sideways, and here was an amazing time to buy also. Even though it looked like it was bear market, you're buying at like 20K. It was below production cost, right? Like if you look at, like, let's say we were here today, like this is the chart, right? It might, like, you might say like, oh, production cost is failing. You're panicking. Oh, this chart doesn't make sense anymore. It's broken. You said that ROM Reactor told me that production cost lower bound never fails, and you're panic selling, you're an idiot, right? So like, okay, that's what some of the miners did as well. So they did panic. They brought the production cost to 13K, but that's just the next support. You're still buying Bitcoin at 20K, which is still amazing. To this cycle, 20K, you would have had almost a 6x at this price. It went to 130K. It depends. Just you have to hold longer. That's all it is. But then eventually you see the production cost hit again. You could buy more over here. You don't have to get, you don't have, you could do what the trenches that Ivan talked about. First time production cost
trenches.
you buy exactly 25%. Next time it hits, you buy another 25%. Burbsy, how you doing? But the key thing here is just once you're lower into the lower bounds, you know that these are the bottom. So, and we're pretty close to it. So, I'm gonna keep updating this. Again, very easy to add to TradingView. The next indicator is on my end at least, is the dollarized volume. Very simple. We just take the volume indicator and we multiply it by the price. So the price is whatever the price. Let's say in this case, yesterday's
Oh, and you
volume,
fixed it so it works right out of the box now?
yeah, and so when you add it, like it goes right away underneath. So
Nice.
say I remove this, and I go to indicators. I type in Moonboys dollarized volume. Right away it goes to the bottom, which is amazing, and yet you see it right. Yeah. And this way it's nicer to see because as Bitcoin falls in price, obviously, or as it increases in price, less volume is the same, more or less going to be dollar wise. So looking at it at a long-term scale, it makes sense because here, for example, this looks like, wow, it's so much volume, but it was like nothing. It's actually just like, on average it was like, wow, this is not really that much. But then here it's like a huge, we've never seen. So you kind of see this clearer with dollarized volume than you would if you just look at regular volume. Especially here as well. We basically had bull market volume, but even though it hasn't been the same as the token volume, the coin volume versus the dollar volume. That was it from my end, guys. Definitely take a look at these indicators and comment below how you guys are using it, how they are improving your game. And Theo, the last indicator is on your end, so if you want to pull that up, let's go through this one really quickly as well.
Yeah, so we got the Moonboys line. I put a space in between Moon and Boys here, so it's a bit harder to find. You'll have to type them in separately.
You could fix that actually.
Yeah, I'm gonna have to fix it.
It's in the code. It's like on the first line.
Yeah, it's all good. But yeah, so I can get rid of my. I was just messing with some Fibonacci's here and some dates. So one thing I was looking at, not related to the indicator, but I was looking at the length of the previous bear market, right? So from this red line to this red line, we had 388 days. So I was taking October 10th. That's this red line here. And the existing red area that we're in, that's when we're below the 200-day moving average, right? So if we take measuring out 388 days, that brings us to November 20th of 2026. So this is sort of the range I'm looking at for potentially the bear market now. But yeah, we got the Moonboys line. It's very simple. It's very much like the Larson line. So it turns yellow if it's bullish, blue if it's bearish. So right now we are bearish because we're below the 44 and the 125. Daily moving averages. Yeah, and then it's got the 200-day moving average, which will turn the entire chart red if it's below that level. So it's really just 3 moving averages, but this is what I want to be using for Bitcoin. And so since we're way below all 3 of the indicators here, I'm not really going to be buying. I wanted to do one of these right here. This is the signal I'm looking for. If I could circle it.
Yeah.
Right, sort of this move here at the bottom of the bear market. This is what I'm going to be watching for. That moment when it closes above the 125 and it even closes above the 200 and then starts basing off it as support. Right here's a really good example. When it bounced off the 125 as support, this is a really good indicator that the bull runs back on. And we could have really backed up the fiat track right there, took out a loan, not financial advice, and we could have rode that for a few years, right? And done really well. So that's sort of my plan for this next bear season, if that's what's happening.
Yeah, and I would love to add that this indicator as well as the dollarized volume indicator you can use on any chart, but they will all work with any token, whether it's stocks. However, with the liquidations heat map and production cost, that one is specifically for Bitcoin. Now, of course, you could always bundle those indicators together. So we can, I can add right now Theo's indicator, which is Moonboys support bands right here. And I have to just, I guess, remove my bands really quickly so you guys could see it better.
What's the Moonboys support bands? What is this one?
That's, yes, hold on, wait. Maybe was this the one we published and we just didn't update it fully? This was kind of it because I don't see.
Oh, maybe.
See if I find yours. You might have to republish it.
The top one, yeah. Moonboys line.
Moonboys line. Okay, so the support band was a different indicator that you forked, I guess, from my end.
Maybe, yeah.
Yeah. So this one. Yeah. I'm gonna delete that one. Okay. So there we go. Now we have the Moonboys line and the Moonboys production cost. Now it gets a little bit messy, but it's fine with the colors. You could see the blue and the yellow and the red. So they're three different colors. So it's just, yeah, you have to kind of zoom in to see what's going on here. And the best price is to go back into that bear market low that you brought up. So now it's a little bit hard to see the price. So that's why in the production cost, you have this green line that goes over it. So it makes it clearer. But yeah, the support bands are here as well. Pretty much, yep, amazing. Like it touched production costs here. And then, you could have scooped up a little bit, wait, and then it went above those lines, and then you start scooping up more. It retests, goes pretty close to production costs, and you're seeing production costs increase as well at this time. That's a very bullish signal. Yeah, you use both of these with Bitcoin. It is a very, very powerful indicators. Now of course you could do it, just don't put them in the one chart at the same time. It's a little messy, but you could just toggle in one and the other.
Yeah, and mine is also optimized for Bitcoin as well, but it does work for other charts. I'm using it for other charts as well.
Yeah, like, and you could use it for stocks. So we had an amazing conversation earlier in the chat before we hit live, and one of the stocks that I was brought up was AMC. It's a very bearish trend. Hollywood has been shutting down production. There hasn't been any good movies really, and the narrative for Netflix has been killing it because they've been paying the actors. They were paying the directors better, so they were making the better movies indoors for your TV in your home, right, for your family. But this experience of going into the movie theater and watching a movie with a lot of people, kind of like watching a play or anything, a sports show, has a completely different energy and experience altogether. You could say it's different. I believe because of that, Hollywood eventually is gonna push back the amazing productions into theaters, and from there it might be a nice time to get into AMC. This is one of the biggest theater holding companies in America. And we could use this line on there. Like you could see every time it went above it, it kind of seemed like it was accumulation, and here in 2020 it was, even though there was a flush down, but then after a while again it was accumulation, and this level did give you almost a 5x, no more, sorry, a 10x. So we could start seeing. Now here was a fake out, of course, but again, once it goes to the bearish side, you have to sell. So you could take a small haircut loss using this indicator, but at least you're out. Like it's way below everything,
and those red zones are supposed to be bear market, but for AMC the whole chart's red, I guess.
For now, yeah.
Exactly.
But it was never the case. If we look at it on a weekly scale, the indicator adapts as well, which is nice. And and here you can see the only bullish scenario again was here in 2020. But once that starts to happen, it could be really nice. So we'll wait till AMC bottoms out as it's doing, similar to here. And then once it starts going back up, it could be a good play. Again, this was a little fake out, but it's fine. I think this was in last year. There was a little meme coin craze with the meme coins and the meme stocks. So this definitely looks like it. It still was a nice play if you think about it. If you bought like right here, but it was just very quick. It was like a 1 day play. Well, 1 week. So yeah, it's from $3 to $12. Still good.
Yeah, this indicator stays on the daily, so even if you go to weekly, it'll still stay like analyzing the daily activity.
Oh, okay.
I made it like that so that it's like responsive. It's very responsive to short term, but not too responsive. Like I don't know. Yeah, you can combine it with regular moving averages, and you can compare them. But yeah, that's the way I built it.
Yeah, if you were quick enough here, I guess you open a position, you do like through 2-3x, and you get out. Which is still nice. You could use this indicator for fast trades because it does flash pretty quickly. Like right away when the whale makes a move, you could see it turn yellow.
AMC's a tough stock to trade. It's at like $1 now.
Yeah, we could go to MicroStrategy as well. Another company he brought was AHC, but that's similar to.
MicroStrategy's been a tough hold as well.
Yeah, so
I've been holding this for way.
Oh, you're holding it still?
Oh yeah.
Yeah, we're still under. I mean, we're rejecting it, but eventually it'll turn yellow. and when it does, it looks like
Probably
it
when
does.
Bitcoin does the same thing. Probably 1 year of pain starting now.
Yeah.
Or starting October, I guess.
It went yellow a couple times here,
Yep.
here, here, and they're all kind of the same price range from $32 to $20. I mean, yeah, it dipped below it as well, but again, we have time in hand, so, or we have like a strategy. So if you make a bet here, and then you see it go here, you just use a stop loss, and then you get out of your position. Obviously, you don't even wait for this recovery. You could wait for this recovery, you get out whenever you want, but you could see like the moment it starts going against your strategy, you get out. You don't want to risk a bear trend getting worse or
My
fake
problem
out.
lately is I'm locked into these covered call trades, and so the price will invalidate the line, but then I can't sell because I'm locked into the option for the next month, something like that. So I'm stuck holding
Oh,
the
that's
stock.
different.
Yeah.
That's that. Yeah, if you're linking the stock for a long term with the option trading, then you're long term. But nevertheless, using these two bands, you could see when the bullish trend occurs, it's more yellow, and these are good trade opportunities in the bullish trend. You accumulate more here, you accumulate more here, right? Bearish is the other way around. You sell here, you sell here. But eventually you want to start accumulating when it starts turning back yellow, like you said. So it's a nice indicator to have. I'm definitely looking forward to using it more, and I would love to hear your guys' output on using these. Let's see. We have the news, right? The
Yeah, we could get into a weather report.
weather report. Yeah.
I just sent it over on Discord.
Okay. Do you want to do it, or?
Sure, I could do it.
Okay, nice.
All right. Rom's got pump fun up there.
Yeah, I just wanted to see the price. There we go.
Oh yeah, 3K.
Wow, we are at an all-time low, guys. Somebody bought a lot. I think that was us.
Good afternoon, ladies and gentlemen. Welcome to the afternoon crypto report on a Sunday. Right now, Bitcoin is at 68,000 with Ethereum at 1,900 and Solana at 85. Over 1 trillion got wiped from equities as the S&P falls more than 1.5% on the day. Gold and silver fall as well. Coinbase misses earnings by over 3%, and the coin ticker falls 3% on the week. Israel arrests multiple insiders who used classified information to make bets on Israeli military operations on Polymarket. Anthropic announces they have raised $30 billion at a $380 billion valuation. Binance France CEO gets targeted in home invasion attempt. Solana kicks off Graveyard Hackathon attempting to revive dead on-chain categories. Russia considers moving back to the US dollar. Polymarket adds 5-minute crypto up-down markets. Trump administration releases Innovation Advisory Committee list featuring top names in crypto, finance, and prediction markets. Tokenized gold's market cap surpasses $6 billion. Bitcoin ETFs post 410 million of daily net outflows. US DOJ sentences crypto CEO sentenced to 20 years in prison for $200 million Bitcoin Ponzi scheme. South Korea launches probe after authorities lose over 340 Bitcoin across multiple cases. The US cuts a trade deal with Taiwan to reduce tariffs to 15%. Twitter adds new posts filters, considers filtering timeline by country. Virtuals deposit 7.5 million worth of their token to Binance. Declining heavy truck sales could foreshadow an incoming recession. Stripe acquires PartyDAO. Pump Fun adds the ability to divert creator fees to GitHub accounts. Polymarket's free grocery store opens in New York City. Myriad Markets releases updated roadmap, and Art Blocks releases Marfa 2026 dates. That's it for your crypto weather report. Back to you in the studio.
Nice. And yeah, what we have in the studio now is the CME futures. So a nice thing to end the show is take a look at how the market makers are treating Bitcoin. So these guys are the Chicago market makers, and sometimes they go home on the weekend, but Bitcoin trades 24 hours. And this guy right here, or guys, couple of them, they thought everything was nice. They bought maybe long positions with the CME, like or something, or they shorted, they will open short positions here, but then they woke up and the price is here, so their short positions didn't get executed. Whatever they were trying to do,
Gaps get filled.
They got skipped. So those guys are angry guys. So now they're gonna be working with the CME market makers. So let's look at the CME chart of Bitcoin. We are at a bullish SAR, so we are seeing that there is a bullish trend on CME. I don't think it's a bullish trend on Bitcoin. Actually, no, a bullish trend on Bitcoin has been happening for a while now. So the CME just occurred, and the gap is right here around 81k, 81.4k, and gaps always get filled. Now, of course, sometimes they take a long time to get filled, as we've seen here. The 92k gap took a long time, almost from April till till November. That's almost half a year. Will it take another half a year to fill this gap back up? Like where we're from February till like October, back to 81k. And the bottom already came in, and that or will they try to fill this up quickly? That is a bet some people can take, but it doesn't always happen. Like here, you would think it would have closed right away because it was so close, but it didn't. But of course, as we get lower and further away from the gap, usually there's a significance to it to be a magnet. Like it won't go too low from it. So it's also good to have this gap stay open as we're bottoming out, I believe. If we go right now to close the gap, there's also a good argument for that as well, because that would show like a lot of people are bearish right now. They're shorting, so there's a lot of liquidity that can be flushed out by pushing the price up and getting and liquidating those guys that are shorting Bitcoin. And then vice versa would happen, because now the longers are making money. Then once they close the gap, they'll just push it back down. So they'll liquidate both the shorters and the longers to make the most bang for their buck. Is it something that they will do? I think only time will tell. But what do you think, Theo? What do you think?
So yeah, we should make a mark on the chart there between 80k and 83k where the gap is. I think we're likely to fill that, right?
Yeah, we're definitely
put a little box on there.
But will we fill it now really quickly? Like in the kind of April is going to be March and April is going to be a little rally to fill that gap, and as well as squeeze out all the short sellers. Where is
get some chop going. Yeah, I can see that. Nice MACD curl coming up there.
This is the one, the rectangle?
Yeah, you use the rectangle.
Yeah. So.
Well, you're going to go from the wick too, eh? That could work.
Yeah, you go from here. So it's a very little, it's a gap. It's a little gap. It's nothing crazy. But...
Yeah, the closure is a bigger gap. Yeah, I think we could hit that.
Yeah, but the closure usually doesn't necessarily have to go. It's just from where the gap is, yeah.
Mm-hmm.
Just extend it. Oh shoot, it was like what, 81k, right? June, August, there we go. November, yep. And yeah, it's a purple gap, because now it could be, depending when this gets filled, it's either going to be bullish or bearish. If it gets filled here, it's probably already bullish. I would have to argue with the time and everything. If it gets, most likely it should be bullish with the cycle theory, right?
Holding nice support there at the 50 week, is that?
Yeah, so yeah, exactly.
100?
So that's kind of where I'm a little bit like indecisive, but I'm still a little bit more bearish. Why? I'll tell you guys in a second. But yeah, so we've been holding this 200 weekly exponential moving average as support, and if this is going to be a bounce, then this is perfect, because the next, as it goes back up, it's probably going to try to retest this 100. Now we've seen this before. There was this right here, what's called dead hanging man candle, which showed weakness. I even kind of got out over here as well from the market. This showed weakness. It bounced on the support, and that was it. Then it found another support here. I'm sorry, looking at this is not as good. Let me, even though the gap is here, I'm gonna switch out the charts, because it's gonna be better to see what I'm talking about. The hanging men are more clear. This candle right here, the hanging man here, the hanging man here, and then the hanging man that we just formed. Now, once they form, usually they do like the market makers hold this level, as they did here. They pushed it up, resistance, flush support. They sold whatever they had to sell. No more hanging man support. Down. Next hanging man. So this is where they could push it slowly back up to here. I could even draw it out for you guys. Like, next week, something like that. That might happen by April, and then we go back to,
Yeah.
Or
could be a long zone here.
Or it could be like, hey, it might never happen, but maybe we'll just go something like that. And this have to close the gap. Well, this would close the gap, sorry. Um, yeah, so it'd be like something like up to here, and then we're going back down. We go make a bottom, we bottom out here, and then we're like filling the gap. We're gonna fill the gap later already. Well, it could be something like this. It all depends with S&P, really. That's why I'm more bearish, because I'm looking at the S&P, and that's not looking too good, and neither is the Nasdaq. The S&P is getting the slope. It's getting very slopey. The next few days, the Monday and the Tuesday, I think we might see a correction in S&P and the Nasdaq to the downside. Especially here, it looks like it's a distribution pattern by Wyckoff. If you overlay Wyckoff Distribution, it's almost spot on. See if I could, yeah, you could see top, down.
Yeah, it does look like that, doesn't it?
Top. Yep. Yeah. So then once this goes bearish, so really just have to wait till Monday. For me personally, I want to see how this trades. Sorry, on the daily you would see it better. But then we would see like support. So once that breaks, and it kind of looks like it's being rejected by the 50, which is what Bitcoin did right before it crashed. Once Nasdaq starts to crash, I mean, it could get bloody. If it's a big crash, it might not be this big. Maybe we'll just go to here or here, and that's it. So that's where I'm monitoring the volatility index, and you'll definitely see the volatility index peak at once the bottom forms, or the S&P 500 falling. Now, S&P is a little bit better. It's more stable than Nasdaq. Nasdaq will fall and S&P will follow because it's tech concentrated. But yeah, my bet is basically to see where the S&P will bottom. Once this goes bearish, we're looking at the weekly support levels, and that is going to be either the 50 or the 100 or something in between. And when this starts falling, if it starts falling, Bitcoin, of course, is going to fall as well. So that's the bet I'm making. Is I'm seeing that S&P 500 is still at all-time high levels. Bitcoin just corrected at 60%. And yes, even though we're having these bullish signals, like bouncing off the 200 EMA, having this gap open, kind of has this narrative where by production costs. So Bitcoin maybe is slowly bottoming out, but I believe with the stock market having some kind of slight correction from here, it can push Bitcoin lower. The opposite argument to this would be the stock market and Nasdaq have to turn back bullish. If the next week comes and we see a big green candle pushing it up, same thing with the S&P, big green candle pushing it up Monday, Tuesday, so Monday specifically, hopefully, or Monday, Tuesday, Wednesday. Those are the days we need to go back up to all-time highs immediately. If we don't, then most likely bearish.
Yeah, it feels dangerous to be holding stocks right now.
Yeah, and they will bring Bitcoin a little bit down. Now again, it might just go from 68K back to 60K. Maybe it'll go to 58K. That's a beautiful bottom. If it does that, that's beautiful. If it goes from like 55 to 60K, I'm definitely scooping up those levels. With the stock market collapsing now, if it does that with the stock market going to all-time highs, that is also a good thing. But if the stock market starts collapsing, then it's like you have to kind of wait till this finishes also. And it could finish relatively quickly. On a weekly scale, once it starts falling, it's like 1, 2, 3, 4, 5, 2 months. In 2 months, stock market finished bottoming, and we're looking at April. Bitcoin will follow the stocks eventually as well. So now, this might not even happen. This is a big correction. Very rarely those happen. It might go to here and that's it, or here, and then the stocks go back up.
Up and to the right on the long term.
Yep, for sure, yeah. With a maybe
not too bad
correction.
Yeah. Sweet.
Yeah, you don't want to be too bearish in this time. There's a lot of indicators that are still, like the 10-year minus 3 months indicator, which is a little bit better reacting a red flag than ISM. It's still a little bit bullish. My red flag was that 1% line, and we're still far away from it. We've been going down, so that just gives us more time before any crazy red flag series like recession indicator. And they could technically maintain this range for a long time if they wanted to. Like here, for example, It was maintained for a long time before it went over 1. But it did spike to 1 very quickly, so that was nice. But I think this was COVID though. Yeah, COVID was a shakeout. You know, like you don't want to trade it. Maybe in 2008 was a better way.
So when it goes, when it spikes, it's a recession?
Yeah, you have to look at the it's like 10-year minus 3 months. Right. Yeah, this is gonna show you. Yeah.
Oh, yeah.
So disregard COVID. It's a little bit hard, but yeah, here it went to 1 in 2007, but the recession came in 2008. It's just like an indicator that like, hey, you're not gonna time it perfectly.
So when it goes below and then it goes up to 1, that's when the recession starts.
Yeah, usually 1 is like right here it happens. So
yeah,
2008 January. But the biggest market crashes were September 2008. But even if you got out in January 2008, like and started shorting, that was pretty good for you. Now it was a real recession though. That's why I think going above 1 is risky territory, but anything below it, we're still bullish. Like here was maybe a little fake out, but the way it happened here, it has to be before. It can't be like, it has to be when it broke 0, went to negative, and then started going up, and then hit 1, which has happened here. -1, -1, very negative. So far, not 1 yet. But once you get to 1, for sure, get out. It's a big recession that might be coming.
Yeah, cool. Okay, let me blast through some charts here. So I got the Bitcoin rainbow chart. It's currently flashing buy. In the previous cycle, it did get down to the low blue level here. So right now, that would indicate a level of 41,000. So keep an eye on that. But this may be an interesting time to buy Bitcoin. Not financial advice, of course. And then we have the altcoin season. So we're currently not in altcoin or Bitcoin season, but we can see the top 50 performers over the last 90 days. And we see that Rain was the top performer, followed by CC, Sky, PaxG, Gold, and Bitcoin Cash. So not a lot doing well here in the last 90 days. For Fear and Greed Index, we're currently at 13. What else can I show you? On the week, we had Pippin, H, Stable, and Kite outperforming. On the day, we see Kite and H. I'm not sure what Kite is. Have you heard of Kite?
Yeah, I did hear of it. I think we looked into it the other day. It's like
GoKite.ai, the first AI payment blockchain. Interesting.
Yeah.
Okay, cool. Something to look at.
Yeah, we could also take a look at the liquidations heat map on Hyperliquid. Like
I got this one up here. For Bitcoin or for which one?
No, for Hyperliquid, in terms of like how many people are bullish and bearish. I think it's like on Ivan's chart.
How do we see it?
I think for shout out to Ivan, it's bullmania.com.
Oh, okay.
Slash something. I forgot where he bundled them all.
I gotta log in.
Ooh. Oh, I thought it was like free on his website.
You have to log in with Discord.
Oh, really? Oh, so it's like private. Let's see. Oh, yeah. He closed it. That does not show anything.
Okay, I got it. Bullmania.
Nice. Yeah, Ivan needs to fix that. I mean, I know he built this website with AI, but this is a perfect example. But let's look at this first before I give Ivan some tips. We have to go.
So go to Bitcoin or go to Hyperliquid?
No, yeah. I think it's like the ETFs or portfolios or commodities. It's like he had it on like one of the links. It's definitely in the dashboard somewhere. Maybe click on the Bullmania top left, and on the bottom trade group. No, it's on. Where did he put it? He had like the ETF inflows. Is it over there? Maybe click the ETF. No. Is it on portfolio? Or is that your portfolio?
That'd be my portfolio.
Okay. Yeah.
But I see this thing show stats. This seems to be a new feature.
Yeah, he keeps changing things up. I don't know. That's the thing also I didn't like with Ivan's experience with website building. It's very, very abrupt changes that make you forget where things were, which is not
yeah, I remember the original token scanner. We all liked it, and then he changed it, and we were like, "Oh, it's unusable now." And yeah, the original method where it was ugly, but it worked really well. How come there's no beans? Like, how can I collect beans on here?
Yeah, I'm not sure. He did remove it. He did have that, and it went away.
Like, you can see my current beans level, but I can't earn new beans, which is weird. Is that like the snapshot? Like, I'm locked into my beans now?
I guess, yes, yeah.
I wonder if it'll ever turn into an airdrop.
Yeah, I don't think they have that website. Oh, right here. This is the one. But how do I get this website? Oh, wait, no. That's not what it was. It is what it is. Ah, man, Ivan. We have to bring it back. If you ever watch this, please give it to us, the Moonboys. And the website that you have is Bullmania, right? Bullmania. We're gonna make the moonboys.com. Hopefully that's not taken. But you can see here it works fine. But the moment you start scrolling down, like I haven't fixed this. I don't know what's going on here.
Oh, really?
Yeah,
It's all broken.
It's a mess. It's weird.
It
Maybe
looks
it's
like
'cause he only
coded with
made it
cursor, maybe.
mobile friendly, and
Yeah.
he completely forgot about desktop. Nope, these images are not even loading. I don't know what this is.
Mm.
Oh, these are testimonials. Something's not right. But yeah, he coded it with AI, right? He said.
So let's see what's trending on Mobi Screener. We have Punch, Penguin, Buttcoin, and Mushu. And then if we go to Dex Screener, nothing. Let's see, I'll reload it. Dex Screener, we also see Punch and Mushu, Dijon, Melon. I keep seeing Punch and Mushu. I'm not sure what these two are.
Yeah, I heard about them. Punch.
Website for Punch.
Sounds like some Asian stuff.
And then Mushu, Twitter. So Punch, welcome to Punch's Sanctuary, a cozy corner of the blockchain where friendship, comfort, and a little plushie make all the difference. So it's a monkey, yeah.
Meme coin?
It's a monkey with a plushie. Cute. And then this is Mushu, sadly passed away on October 2nd, 2025. So this coin now stands as a symbol, not of loss, but of legacy. It's a cat that died. Okay, cool. So slow day in the trenches. Yeah. The white alien.
Yeah, we could look at the... Oh, we did look at the bubble chart. There wasn't really much there.
Yeah, I could go back to the bubble chart.
Yeah, you know, I really liked back in the day when we had the Morales money. We had the find this token sniffer.
That was good, yeah. Oh, and MVRVZ score looking like it wants to come down into the green zone here, but not quite there just yet.
Nice.
Yeah, so I think we still have room to go down before it's in the real buy zone.
Yeah.
That's what everything's pointing to. For Bitcoin liquidation heat map, we are starting to see some liquidity up here at the 90K level, so that could indicate short-term price action to the upside, potentially, based on what we're seeing. But yeah, for crypto bubbles on the month, we just have Kite, Pippin. On the year, we see Pippin, Coca, Zek. Shout out to Coke. Yeah.
Nice.
DeFi Llama's coming down, and then there's just Polymarket to end off the show as usual.
Awesome. Yeah, I think
anything you're looking at on Polymarket?
I mean, other than in the Super Bowl, I did my first bet on sports. It wasn't really a good experience. Lost money, and then you're able to trade in between the positions, so it's like you could get shaken out pretty easily.
Yeah.
If it was more like a locked position, I would be more comfortable with trading on Polymarket, but because you're allowed to get out, get in, it just feels like it can get manipulated pretty easily by market makers. So
yeah, I've been getting some pretty good Polymarket calls from Brad Mell in the Bodoggos Whale Discord. He calls like sports stuff sometimes, and he's been pretty rock solid. He's like, guys, time to bet on the Seahawks or whatever, and bet the house. He's like, this is a sure thing, and then they go into win, right? So he's been pretty reliable. Shout out to Brad Mell in the Bodoggos Whale chat.
Yeah, but that was still like Seahawks. It was, how would you know? They were both teams. They had the same record.
Yeah.
The only difference was Patriots had a new guy that kind of, I guess he couldn't do the pressure of the Super Bowl. It is what it is.
Yeah.
I should have kind of expected that. But...
Cool. Well, do you have any final thoughts before we wrap?
Yeah, no, I think we discussed pretty much everything. Altcoins are still... Cardano, where about my Cardano?
We didn't really look at like ETH and Sol either. Cardano. We could cover those real quick, I guess. How are we looking?
Bleed. My God.
I'm still holding a lot of Sol, unfortunately.
Once Bitcoin starts really bouncing, it might make a nice bet on Ethereum, but I was kind of like...
Shout out to Matt Smead and the Ethereum gang.
The bet was... Yeah. It does bleed and then it does recover, so
yeah, up and down.
You don't want to fade, but then like in the bear market, you could just below the 200. We're kind of there,
That last cycle was a Bitcoin cycle, though.
Yeah, exactly. So it's you gotta wait for Bitcoin to do exactly that, and then Ethereum will probably get worse, and then Solana is still up there, still in La La Land, but also bottoming out.
Yeah, we're on a red day.
Well, on this last minute support, we kind of broke it, back to it. So retesting, we're retesting this upper bound, and if this breaks, it's gonna go down here, $50.
Oof.
3650.
Not down to $8 again?
No, the first you just go on the top because this
Yeah.
makes sense. Like you can see the top levels. Like this is probably the next level. Really is $60. Oh yeah, 60 something like that. $55.
Get him next cycle.
Range. And yeah, you know, and like with this, it's like it doesn't matter. You have to watch these coins. I have the chart. Like Bitcoin. No, Pulse versus BTC. Because at the end of the day, it doesn't really matter what the price on their dollar is. It's all about their Bitcoin value. And yeah, here it's a better price, a better chart. So it still looks bullish-ish. I mean, it just got bearish. It just turned bearish right now. So you wouldn't want to hold Ethereum, and then once this looks like it's going back to bullish, that's when you start holding Ethereum. Like has to go above the 50 for sure. It really kind of had a chance here. I mean, we really almost had an alt season, and then it just didn't happen. Kind of sucked, but
Yeah.
it got postponed until next cycle. Maybe it'll be like in 2027. But yeah, well, after the bear happens, if you see any alts start doing this, so then you wanted to look at Solana as well. So definitely look in Solana / BTC. Oh, what on BTC? Yeah, I think I'm having alerts.
Yeah, I was getting a few weird ones as well.
Yeah. Right here you have also again bearish, still bearish. Nothing on the weekly, still bearish. Daily, somewhat bullish, but on the long term, we're looking at these things at a weekly, right? It's a nicer chart. Yeah, again, you want to, once it starts really going above, that's when you want to switch into holding Solana. So even here, like for example, we'll use Solana as an example. November 2023, it confirmed the breakout above the 50 and the 100 weekly exponential moving averages. So November, oh, even not November, October 30th. So then like, okay, like what was the price? We could even see like of Bitcoin on October 30th versus Solana on October 30th and versus their bottom. So Bitcoin on October 30th was $35,000, $35,000. So if you would have bought Bitcoin right from your kind of like 2x, you're 100% up. And now you see Bitcoin 100% up. You see Solana on a Bitcoin all of a sudden bullish. You're buying Solana at that point. Phantom Wallet, October 30th. Solana was... You don't have to sell all. You could sell a little bit of your Bitcoin. Solana was between $32 and $40. So let's say you
remember
got it at $35.
I did go nuts on Solana there. I think I put $1,000 in, and then it kept doubling, and I kept just shaving $1,000 off to the point where I started to realize like I need to stop taking money out of this thing and just let it ride. You know what I mean? Because it was like...
Yeah,
it just kept doubling. Yeah, it was crazy.
So yeah, so like if you traded with Bitcoin, it makes your life so much easier. So here you buy at $30 on October 30th. Right here, you bought it at $30. You swapped your Bitcoin that was $35,000. You bought it at the bear market at like $15,000-$20,000. So you 2x your Bitcoin. Then from there, I mean, yeah, you would have made more trading Solana, but then at the end of the day, people are very lucky that Solana survived. You know, it could have went to zero, and Bitcoin would not. So you buy it at $30 anyway, which is a fine price. I remember this time a lot of my friends were like, "Oh, I'm not buying Solana anymore. It's overpriced." And even I made that mistake because I kind of fell into that group chat. I was not trading it versus Bitcoin. I should have traded versus Bitcoin, but because I didn't, I thought like, "Hey, it's gonna go back to $8. Why am I buying here?" Big mistake. Why? Because look what happened. $30 turned into $300. 10x. Yeah. Bitcoin didn't even do that this cycle.
That's right.
But if you would have taken and then following the same thing, so just to end the note before, this is a good discussion trading against BTC. So if you go back to Sol for BTC, you know what, I'll just add this ticker here because it makes sense. I'll remove it afterwards. But in Sol and BTC, how do you know where the top is? Well, it really peaked. You wouldn't really know, but like Sol to BTC kind of started going on a sideways range over here. So it peaked really high here, December, but you're kind of holding at this point still both Bitcoin and Sol, and you're riding the wave. Both of them are increasing at the same time. That's what sideways means, both Sol and Bitcoin. So eventually, you know, this is going to turn bearish, the sideways thing. The bull market ends, Bitcoin is going to start showing weakness, and now you're kind of understanding like, hey, alt season happens a little bit after Bitcoin starts showing weakness, or maybe it might not happen at all, as we saw in this cycle. But once the thing starts going back bearish, as like it did here, for example, it started losing the 50 moving average, weekly moving average, which was on December 2024. Let's look at the price of Sol. You start selling Sol for Bitcoin. Now Sol on December 2024. Or you could sell it for $1 at this point too, because again, this is a bear market play. You could hold dollars, stables, you know. December 2024, so was about all-time high, $200 something. You're selling that into dollars, or you could go back into Bitcoin if you want, you know. But because you already made that 10x, you know, 7 to 8x, so amazing. And you know, you can see weakness in Bitcoin to Solana. You see weakness also in Solana a little bit later, but you know, you don't have to necessarily wait for this. You could see that in this chart right here.
Yeah.
You know, went sideways. It went broke above for 1 day, well, 1 week, but then it crashed back down, and then from there it was like here another run up, you know, but a little bit less riskier. I don't know what the play was here, but we could take a look at that. This was August. Oh, last summer. Yeah, so
that's where you sell all the Bitcoin and you buy a bunch of Bodogos right there. That's the move.
Yeah, it was an NFT.
And then ride it all the way back down.
Yeah, so it's a little bit better to look at this in the bear to bull, and then intermittently as the bull ends, it's kind of like, yeah, here was like, you're right, Bodogos.
Yeah, it's the famous, the legendary Bodogo trade.
Yep. Yeah. So Solana versus Bitcoin, we gotta still wait. It's bearish. Eventually, it'll turn bullish again. Amazing. Same thing with Ethereum.
Yeah, the Bodogos play exactly.
Yep.
Cool. Okay, so actual final thoughts before we wrap now, as we approach the 1 hour mark.
That is pretty much it. Shout out to everybody that was watching. And
sell everything.
Likes, share, and subscribe, and everything like that. Sell everything? No, why would you sell everything? It's too late now.
Sell everything 3 months ago.
Yeah, you should have sold before.
Start dollar cost averaging.
You could short the stocks next week. You know, that's a play that I'm going to be looking at. Again, got to see what's going to happen Monday, Tuesday, Wednesday. But yeah.
Stop selling covered calls. Start buying puts.
Well, I don't like to buy puts too much because the volatility, it goes inverse, because like the puts, you have to be in the money, and then you're really just looking at intrinsic value. So you have a little bit less, but you could still make money with puts. That intrinsic value, that is money, which is nice. I'm using a tool called Thinkorswim with Schwab, and over there, when you open up the position in options, they do tell you your break-even price based on that, what do you call it, intrinsic value, rather than the volatility and everything like that. So that will just boost it if you have like an increase in volatility and your option is in the money, whether it's a put or a call, it's going to boost it. Usually puts is just the volatility is dying down, but all that means is just the bid ask spread are not going to be that high. So
yeah,
and they're not like trading higher, like as fast, for example. So like usually what you want is, once you're in the money, the bid ask spread, they narrow down. But before, it's like speculation. You'll have like somebody saying, I'm gonna sell this for this much, I'm gonna buy this for this low. That just the bid ask spread has to narrow down, and usually it only narrows down once intrinsic value gets into play. So if you're buying options out of the money, more risky. You might be overpaying for them because there's less volatility. So you have to know what you're doing with options. Don't play with options if you don't know what.
Cool.
That one.
Okay. Thanks so much, everybody. Yeah, like you said, don't forget to like, comment, and subscribe, and we'll see you on the next one. Moonboys out. Cheers.
Peace.